Hey everyone, welcome back to Corporate Decoder. Today, Jefferies Financial Group JEF just filed its annual report for 2025, and I am seeing a mixed bag of investments with some interesting numbers to unpack. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company's employee profit sharing plan holds a lot of investments, and while some areas are strong, others show a pretty significant drop in value. So this filing is essentially a look at the investments held within the Jefferies employees profit sharing plan, or the plan for short. It tells us what kind of assets are in there and how they've performed. Think of it like checking the health of the retirement savings for Jefferies employees, which can sometimes give us clues about the company's overall financial picture. We are looking at the year that ended on the 30th of November 2025. This report is a standard annual filing that gives us a snapshot of the plan's financial status. The plan itself is named the Jefferies Employees Profit Sharing Plan. It is a way for employees to save for retirement, and it holds a variety of investments. Let's dive into the numbers. The main financial tables show the net assets available for benefits. This is the total value of everything in the plan. As of the 30th of November 2025, the plan had a total of about $1.43 billion in net assets. That is up from around $1.29 billion in 2024. So, overall, the value of the plan grew by about $140 million in that year. That sounds pretty good on the surface. The biggest chunk of this money, well over $1 billion, is in what they call participant-directed investments. This means employees are choosing where their money goes within the plan. They can pick from common stocks, common collective funds, and mutual funds. Mutual funds are the largest category here, totaling over $1 billion in 2025. That is a significant increase from about $930 million in 2024. This suggests that employees are putting a lot of their retirement savings into these diversified funds. The Common Collective Fund also saw substantial growth, going from about $190 million in 2024 to over $226 million in 2025. This indicates a strong interest in these types of pooled investment vehicles. Now, common stocks are a bit of a different story. While they still represent a large portion of the investments, the value dropped from about $160 million in 2024 to just over $121 million in 2025. That is a decline of about $39 million, or roughly a 24% decrease. This could mean employees are shifting away from individual stocks, or that the stocks they hold have lost value. Given Jefferies Financial Group's own stock is listed here, this could reflect a sell-off of company stock within the plan, or a broader market downturn affecting some of the individual stock holdings. Historically, companies often see employees holding more of their own company's stock within 401k type plans, and a drop like this might signal a desire to diversify or a lack of confidence in the near-term prospects of the company's stock. Looking at how the assets changed during the year, we see significant additions. Total contributions, which include employee and employer contributions, came in at over $106 million. The investment income was even more impressive, with a net appreciation in the fair value of investments of nearly $80 million. Interest and dividends added another roughly $41 million. This investment income is what helped drive the overall growth of the plan assets. On the deduction side, the plan paid out over $88 million in benefits to participants. This is normal as employees retire or leave the company and access their retirement funds. Now, let's dig into some of the notes to understand these numbers better. The plan covers most US-based employees and is managed by an administrative committee, with Fidelity Management Trust Company serving as the trustee. The plan itself is subject to ERISA, the Employee Retirement Income Security Act, which sets standards for retirement plans. Employees can make pre-tax and after-tax Roth contributions up to certain limits set by the IRS. They can also contribute a flat dollar amount or catch-up contributions if they are over 50. The company also provides a matching contribution, which was 25% in fiscal year 2025. This encourages employees to save by giving them extra money. Importantly, the company did not authorize any discretionary contributions out of profits in fiscal 2025. This means any profit sharing was not put into the plan that year. Participants have a choice of investments. As of late 2025, they could choose from 2 equity investments, 1 common collective fund, 33 mutual funds, including a money market fund, and a self-directed brokerage account called Brokerage Link. This variety allows employees to tailor their investments to their risk tolerance and financial goals. Vesting is how employees earn the right to their employer's contributions. Employees are immediately vested in their own contributions. For company contributions, there is a tiered system based on years of service. After 2 years, employees are 33% vested, 67% after 3 years. and 100% vested after 4 years of continuous service. The plan also allows participants to take out loans from their accounts up to certain limits. These loans are secured by their account balance and bear interest at market rates. As of November 2025, there were over $5.8 million in these participant loans. This is a common feature in retirement plans, providing a way for employees to access funds without withdrawing from their retirement savings, though it does come with interest costs. Here is where we get into how they value these investments. The plan follows accounting standards for fair value measurements, classifying investments into Level 1, Level 2, and Level 3. Level 1 investments are valued using quoted prices in active markets for identical assets. In this plan, common stock, including Jefferies' own stock and other individual stocks like Vitesse, is valued at the closing price on the New York Stock Exchange. As of November 2025, the common stock holdings were valued at about $121.5 million, all in Level 1. Mutual funds are also valued using quoted prices in active markets, also considered Level 1. The filings show a breakdown of mutual funds by category like domestic stock funds, balanced funds, fixed income funds, and international stock funds. The total in this category for 2025 is over $1.19 billion. The Common Collective Fund is valued at its net asset value, or NAV, per S-Hare. This is a practical expedient, meaning it is a reasonable way to estimate fair value. This fund held over $226 million in 2025. This note is important because it explains that the NAV valuation is provided to help reconcile the fair value hierarchy with the total amounts reported in the financial statements. Essentially, it confirms that they are using a standard method to report these values. Transactions involving the trustee, Fidelity Management Trust Company, and the company's own stock are considered exempt party in interest transactions. This is common in employee benefit plans. The plan holds shares of Jefferies common stock, and as of November 2025, it held over 2 million shares valued at about $117.5 million. That is a significant portion of the company's stock held within its own employee plan. This can be beneficial for aligning employee interests with company performance, but it also concentrates risk. Notice the decrease in Jefferies common stock holdings from 2024 to 2025, mirroring that drop I mentioned earlier in common stocks. The value decreased from over $155 million to $117.5 million. That is a loss of almost $38 million on just the company's stock within the plan. The schedule of assets lists out the individual holdings. We see major mutual funds like the Fidelity 500 Index Fund with a value of $306 million, the Fidelity OTC Commingled Pool at $226 million, and of course, Jefferies common stock at over $117 million. This again highlights the concentration in a few key areas, especially with Fidelity managed funds and the company's own stock. The participant loans are also detailed here, showing that interest rates range from 4.25% to 9.5%, with loan maturities extending out to 2035. A notable mention is the SE Cure 2.0 Act, which became effective in 2024. The plan administrator adopted some optional provisions allowing for emergency withdrawals and other specific withdrawal types. This reflects an effort to adapt to new regulations aimed at improving retirement savings accessibility. Now, looking at this information, the Jefferies Employees Profit Sharing Plan saw overall growth in net assets from 2024 to 2025, primarily driven by strong performance in mutual funds and collective funds, and significant employee and employer contributions. However, the decline in the value of common stocks, including a notable decrease in the holding of Jefferies' own stock, raises questions about the performance of those specific investments and employee confidence. The large holding of the company's own stock within the plan, while intended to align interests, also represents a significant risk concentration for employees. The company's decision not to make discretionary profit-sharing contributions in 2025 could also be seen as a signal about its profit performance that year. The biggest risk I am watching here is the concentration in Jefferies stock within the employee plan. While it is common, the significant drop in its value suggests a potential for substantial losses for employees if the stock continues its downward trend, similar to what we saw with other companies where employee retirement plans were heavily weighted in their own declining stock. That is my take. Stay decoded. If you want the broker and charting tools I use, they are linked below affiliate links that support the channel. Like, comment, subscribe, and join our Discord for more deep dives.